Hello and welcome. The euro and the pound both fell sharply versus the dollar yesterday. The plunge came after the release of strong data on US retail sales and Michigan consumer expectations, which is a good factor for the American economy as consumers keep spending money despite record inflation. In addition, the hawkish statements of FOMC members yesterday helped push the euro to its monthly lows, update them, and extend the downtrend. As to the ECB's interest rate decision, the regulator kept its monetary policy unchanged. During the press conference, President Lagarde announced the bank's plan to end its bond buying program next quarter. The month of June was mentioned as the point of no return, as it would be time to consider the necessity of hiking rates by 25 basis points. In other words, the ECB might increase rates next quarter, right after the end of its bond buying program. Generally speaking, Lagarde's press conference had little effect on the euro, while strong economic results in the US boosted demand for the greenback. Speaking of today's macroeconomic calendar, no events are to unfold in the Eurozone but the full release of France's and Italy's consumer price index. The United States will report the results of industrial production and the Empire State Manufacturing Index. Should all data related to industrial production come in positive, demand for the dollar will increase. If so, euro-dollar may well update the weekly low. Technically, bulls and bears are both trying to take support at 1.0776 under control. In this light, bulls will attempt to build up a new upward correction. Therefore, a false breakout at 1.0776 will make a buy signal with a target at 1.0833. The target level is in the line with the moving averages. That is why a breakout at this level will create a sell signal, and bears will try to break through 1.0776 and push the price to 1.0728 at 1.0636. You may go long on a bounce of 1.0636, allowing a 15-20 pips intraday correction. Long positions from the 1.0728 mark should be entered after a false breakout only. However, if the quote consolidates at 1.0833 and no active selling takes place at this level in the first half of the day, a test from the top to bottom will produce a strong buy signal with a target at 1.0885. One more target stands at 1.0931. You may go short on a bounce of these target, allowing a 25-35 pips intraday correction, as well as look for sell entry points from 1.0885 after a false breakout only. As to the British pound, we can see the bullish rally was a fake one and the price plunged. Yesterday there were many strong entry signals made. A nice entry point was created at 1.3034. The price now trades in the sideways channel between 1.3057 and 1.3081. If bears manage to break the channel's lower limit, 1.3057, consolidate below and retest the mark, the volume of long positions will rise and the price will break through the 1.3034 level. This is when you could go short with the target at 1.3008. You could enter long position on a bounce from the target level, allowing a 50-20 pips intraday correction. However, should a false breakout emerge at 1.3057 and bulls protect the range of the price, go above 1.3081 and consolidate, you could buy the instrument with a target at 1.3101. One more target is seen at 1.3122. You may go short on a bounce of this level, allowing a 15-20 pips intraday correction, as well as look for sell entry points on the rise from 1.3081 and 1.3101. after a false breakout only. In such a case, the sideways channel will widen and target levels will be opposite of the support level. Good luck and have a nice weekend.